Hi guys, hi, welcome to the Two Docs Podcast. Dr. Ellie here.
And I'm Dr. Ingky, and the podcast, we are two medical doctors generally speaking on a lot of non-medical stuff.
Non-medical stuff, and we touch on
finance, on entrepreneurship, on social stuff,
leadership,
sometimes a lot. And we give a lot of personal views.
Yeah, mainly it's personal views, so whatever it is, again, we are not the professionals in the field that we speak, except if it's medical, but we don't talk medical this time. Basically, it's make you relate, because I think most people who tune in also have a vast range of experiences.
Yes, that's right.
And we just give you our 2 cents worth from our own experience for you to compare and say, okay, at least it's a bit unbiased. All right. So speaking about biasness, right? This week, we've been talking about a couple of financial topics. This week, I'm going to go a little bit controversial. So I want to talk about insurance agents.
Unfortunately, they're necessary evils.
Unfortunately, they're very necessary.
Necessary evils.
But most people would have had at least one bad experience. At least.
No, I would say it's not really a bad experience. Yeah. But whenever you meet someone selling insurance, right? The main aim is trying to
close the deal.
Yeah, they want to sell you stuff.
They want to sell you something.
They want to sell something. And people don't like. People want to buy, but they don't want to be sold to. Yes.
Correct. But most of the time, they'll be selling it, pushing it quite hard. And over time, if someone badgers you enough, more often than not, you will give in. Most people will give in.
Yeah. So what happens is a lot of insurance agents become very thick-faced, and then they just keep badgering you until you give in.
Yeah.
Right? You give in, you buy one plan from them, and then you hope that they disappear after that.
Yeah. You hope they disappear. Now, do you have any bad experience, or do you have any experience?
I would say generally my experiences are not that bad. Actually, pretty positive. But of course, I have one bad experience with an insurance policy, which was sold to me. It was actually medical insurance.
Oh, okay.
Right? So upon buying the insurance, of course, it was actually one of the cheapest insurance rates around the market.
Fair enough.
Right? And it covers a lot of diseases, and it was actually for my parents who were above certain age limit already, which insurance companies didn't want to cover. Now, of course, when time came to claiming the insurance, there were a lot of hoops and hurdles to hop through. It wasn't as simple as, this is the medical bill,
please give me my money.
Yeah, please give me my money back. Nope, they ask us to run hoops around, run circles, go to the hospital, get this paper, get that cert and all. Yeah, so it was very big hassle.
Okay.
Very big hassle. Yeah. Bad experience for that one policy.
Thing. Yeah. Well, I had my first insurance policy. So the first insurance policy I bought, I was still in med school. So introduced by a family friend, and they came and they told me, I don't know why, but a lot of times, probably your first or your second or your early insurance agents are usually referrals from someone you know.
Yeah, of course.
From someone you know. And more so when it comes from family or close family friends, there's a bit of uneasiness.
Yes.
To buy, to support, yes, no. And if your dad says, just listen, you don't need to buy, but if you can support. Well, that's the worst thing to say to your child, man. Don't need to buy, but listen to them. They want to, present something to you, and you decide, if you want to support, you can support. See all the words that they use, which literally, emotionally tells you better buy lah, whatever it is. And that's how I end up with my first policy.
Do you still have it?
No, I stopped already. Okay, got back a bit of money because invested, pumping long enough, but it was literally worthless.
Yeah.
It was literally worthless. My first policy, right, guaranteed that upon death, my parents would have gotten 20,000 ringgit.
Okay. Why your parents? Oh, because they were
because that time the only nominee is my parents. I don't have kids, no wife, nothing. Still a student, and then it went into early medical days, and it's only later on I realized
10,000 is not a lot of money.
20,000 if I die, 20,000.
No, as a student, 20,000 was a lot.
Yeah, as a student when someone told you 20,000 can cover a lot of things, not too bad. Then when you start working, you realize 20,000, some funeral costs also cost higher than that. Won't even cover your funeral costs. So anyway, this week we're going to talk about things that perhaps not many agents are telling you about.
Not what are they?
All right. So number one, we break it down. What kind of insurance you need at what point in your life? All right. So the one thing that most agents want to sell is the life insurance.
It's the life insurance. Yes.
Life insurance. Okay. Why? Because it's got very good returns when you are 99 years old. They always sell you the same thing. When you are about 80 years old, you are worth how many million?
Yep.
And you can cash it out if you want to.
Yep.
You can give it away if you want to. Imagine how much money you can give to your loved ones, to your grandchildren, your great-grandchildren. It's been sold like a savings plan.
Yeah.
However, fair enough, yes, there's a lot of life coverage, but the premiums are very high.
True. That's
Premiums are very high.
Yep. And you tend to pay long term, right?
Long-term
premiums.
Long-term premiums. These are not something that's short. The coverage is not high compared to how much you are paying for.
Correct.
So for someone who's still early in your career, it's not good value for your dollar. Really not good value for your dollar. So I would say that's the one thing that they don't tell you when they start proposing the first thing for you. And I mean, to be fair, that's their job. They need to present the best thing that they have with the best commissions back to them.
Yes.
And if you want to, it's a choice. They will assist you. But always make sure to ask, what else are my options? Right? So that's point number one. Point number two is you need to know you need to know what are your family history and what kind of diseases they have.
True.
Don't get sold on the idea that you're going to get all 36 kind of illnesses if it's not in your family history. Right? And even if there's cancer, what kind of cancer and when was the progression? Was it a late onset kind of cancer? Was it early onset kind of cancer? It's good to have the coverage, but if you're going to just go bang for your buck, and let's say you're only 20, 24, 25, and you are still an early income earner, I would bang more on PA.
Yeah.
Personal accident.
Yeah.
Why?
Right.
It's a lot of returns. There's a higher chance you
actually get into
an accident.
an accident at a younger age. Yeah.
Correct.
That's right.
Rather than getting any of the
any
diseases.
of the, yes.
Yeah. So I mean, everything is about risk. It's risk management, right? So a good agent would probably have to tell you that too. Okay. The third one is your commitment time. Commitment time. So if you ever study your policy, right? Of course, the ones that they love to sell these days are the
investments one, especially the investment which is tied to your life insurance or investment tied to your medical.
Correct. So and then they give you the fluctuation,
Yes.
the 5% low, the 8% high, and they sell you on the idea that over time you can be worth this much. Minimal also you'll be worth that much. All right, there's no such thing as minimal. It can still be lower than that.
Yes.
That's just the moving average, right? And also the commitment. Again, these are things which you're gonna have to be committing to a long term, and you need to know if you need to exit. When do you want to exit?
Correct.
When do you want to exit? And one of the things that if you look at any of your insurance policy, rule of 13. On the 13th year, right, whatever money you put in, that's the only time you get back dollar for dollar.
Yeah. Okay.
So if you contribute, let's say 10,000 a year, and on the 13th year it's 130,000. When you stop your policy at that year, you only get back that same amount.
Yes, correct.
All right. So do not be duped into thinking it's a savings plan. You're betting against your own life. That in case if you die, yes, you're worth a lot more. But if you need the cash back, only on the 13th year is worth taking out and losing all the interest of other areas.
That's right.
Okay.
And also you run the risk of losing everything, especially in early on before the 13th year you stop the policy.
Yes. Whatever you pay, right? The
whatever you get
surrender
back
rates is actually very low.
Yes,
very low. So you need to be able to adjust. So again, when I said if you're gonna bet against yourself dying, what is the most common way that you're gonna die? I mean, it's not a nice topic to talk about.
That is true.
But
that is true.
Risk management is all about talking about the taboo talk that you don't want to talk about.
Yes, that's right. And I think one of the things that also agents don't talk to you about is whether you can actually afford the premium or not. Because
Correct.
I've actually seen people who don't earn much and a big chunk of their salary actually goes into paying the
Correct.
premium for the insurance.
Yeah, but 1/3
Yeah.
or more.
Yes, I've actually seen that higher.
Yes.
1/3 of their, and of course the agents tell, in case anything goes wrong, you're covered. Yeah, but you don't have enough to survive on a
Correct.
month-to-month
On a
basis.
month-to-month basis. And then one of the nasty things that I'm just gonna say it out loud anyway. One of the nasty things that they can make money from, or the companies make money, is when you drop out.
Yes, correct.
I mean,
Yes,
we call a spade a spade.
correct.
It's a business.
Yeah, it's a business for them.
They need to make the money so that they can pay back for people who died.
Yeah.
They have to pay back for people who got diseases or
Yes.
hospitalized. So you have to find a way to make money, and the best way to make money is when you drop out.
When you drop out.
Because again, how many of you can hold for 13 years and say, okay, now I take back my money dollar for dollar? Even then, you've already lost out. They've taken your money to invest already.
That is right. That
Yeah.
is right.
So they bank in on you dropping out. And another reason why most people drop out is when their agent also left.
Yes, that is true. So one of the tips that one of my insurance agent's friend actually told me is this: do not buy an insurance policy from someone doing part-time insurance,
That is absolutely
because
correct.
the rate of them dropping out is very high.
Very
and
high.
even if they're doing full-time insurance, do not, and I'm sorry to say this, but do not buy from someone who is still in their first to second year of full-time insurance, because the dropout rates are actually very high.
Correct.
Right, for the first 2 years, because once they realize that once the agents have exhausted their friends and family, and they are men, and they have to cold call, they realize they don't have the skills to cold call.
Correct.
They end up going back to other jobs.
Correct.
And then what happens is they then pass all their contacts or their clients to their
upline.
to the upline. And most of the time they don't actually tell you that they're leaving.
It's quiet.
It's quite, they just disappear.
They just
Then when
disappear.
you want to go and claim, you say, hey, I'm sorry, I'm not with the company anymore.
Yeah.
Then you have to go and track
Who
down who is
is the
now
one
in
managing
charge of
you.
your, and then you have to call the HQ. HQ say, oh, we have to go and double check your policy number,
Yep.
and they get back to you very, very late.
Correct.
So by the time when you have an emergency and you can't find your agent, then you start to panic.
Yes. And then, or you start claiming, or you start paying first.
start
And when
paying.
you want to claim, you run through all the loops
Yes.
and then realize they're not going to pay out full.
Yes.
You get very, very bitter.
Correct.
Very bitter.
Correct.
So, I mean, fortunately, unfortunately for the ones who are still young, it's always an uphill battle. But the dropout rate, you're right. The first 2 years is when they can retain. Not many people will survive beyond the third year.
Yes, correct.
Not beyond the third year. And you know why? It's because of the target set. Okay. Side story. I was an agent for a while.
Oh, okay.
I was an agent for 2
Interesting,
years.
interesting, eh?
Yeah. The reason why I became an agent was because someone was trying to sell me something. And when I start asking questions, they don't answer me directly. Then they say, let me get back to you. Then they'll ask the upline. They'll come back a day later. Okay, so this is the answer. Then I ask another question. Let me get back to you. I got so fed up. I'm just like, why don't I just go and find out myself? So I actually became an agent for Great Eastern. Took the exam, passed. And then, part-time lah.
Time lah.
Thankfully, not many people buy from me. And those who bought from me, I'm very sorry. So this is bitter experience of me telling you don't buy from a part-timer. Always go full-time. There's no such thing as a part-time insurance agent.
Correct.
There's no such thing as so-called financial freedom. You work as you plan, or you can do it, on the weekends. You can do it for 2 hours a day. No you're
such thing.
in or you're out.
Yes.
That's it. So it's only after I became an agent I realized what are the different things that are there, are the different insurance tools that are there, and how you can make the best out of it. Now, one of the things I get a bit annoyed is when people start selling things to older people. The older ones.
Okay.
All right. So kena dia lah. All right. So someone sold my dad a policy, my mom a policy, and I mean, to be fair, the whole idea is to build a so-called legacy for the grandkids. The idea is good, the intention is good, but it was taken on a perpetual plan.
Oh,
The investment link type.
okay.
So which means you have to keep paying, and the only time the legacy really happens is when you die.
Okay.
It's when you die. And fair, the amount is okay, but the amount that you need to fork out is also quite a sum. And when when my parents are already reaching an age when my dad stops working,
Yeah, then there's no income to actually pay the premium.
who's going to pay?
Correct.
And if you don't pay, you surrender, you're going to lose out. Then you have to play on the 13th year again. So again, that's another thing that you have to be very careful of, right? If older people, if your dad, your mom, or whoever in the older generation wants to do, take those time limit ones, 5 years, 6 years. So you know your burden is only in 5-6 years. If you've got cash, you can just dump in all and say, okay, I'm done with the 5-6 year. The maturity is 18 to 20 years. Those are really for the grandkids. In between, anything happens, the money still comes up. All right. So again, these are the few things that your agent may not be very open to tell you upfront. This is hearing from us, experience.
Yes. Yeah. So I would say, end of the day, right? Do your research.
Do your research.
Do your own research.
And ask around.
Yes. Always ask around.
Don't commit so early.
Correct.
One other trick which I don't like is that they tell you to pre-sign forms. Don't do that. Don't do pre-sign forms. The pre-sign forms, they say, just sign it first.
Then
we will only submit 30
we
days
submit
later.
yeah.
And if you within that 30 days you decide you don't want to, just let me know. I will cancel. You will forget.
Yes, that's right.
You will forget. And it will go through. And you've already signed the policy form. You've signed your credit card form. Everything starts running before you know it.
Correct.
This booklet will come and say, hey, you're the owner of this new insurance policy and thanks for paying. And you'll be like scratching your head. When did I sign? Okay? Don't do pre-sign. If you're not sure, hold it off. It's okay. It's okay. If they say, oh, it's time limited, it's bonus, all this, it's an insurance. You're supposed to die and only get the money. So don't fall into these loopholes. I think the final one is those whereby they put in those investment ones, and they give you time limit. Time limit. These funds tied in with insurance are limited X amount of unit, and they are finishing soon.
Yeah.
It puts a pressure on you.
Correct.
When you have that pressure, you don't make good decisions.
Correct.
And a lot of people use this as lazy investment.
Yep.
Lazy investment. But remember, if you're not sure, watch our last episode. We were talking about lazy investment, and it's really cool. Dr. Ingky talks all about lazy investment. You'll love it. So if you're going to use insurance as a lazy investment, be very careful, because this one has a commitment that you must abide.
Correct.
Real lazy investment is this month I put, next month I don't put, next year I don't put, 10 years I don't put. It doesn't matter.
Correct.
This one, there is a commitment to it.
Yes, that's
and
right.
if you don't put in, they will deduct off your principal. And whatever so-called end value you have starts reducing.
Yeah. Hence, that's why insurance forms are usually so damn thick. So,
Sign non-stop.
and a lot of times you have no idea what you're signing, right?
And the words are damn small.
Yes.
And
it's the banking on people that they don't read the
Correct.
terms and conditions.
Don't read the terms and condition, and you drop out. And you drop out. Right.
That's
so
right.
again, you're hearing it from us. Agents out there, do a good job. Please make sure that all your clients know what they're getting themselves into. Educate yourself to be able to answer or provide solutions even before they ask.
Correct.
I think because a lot of trust has been put onto you as an agent. And I think as an agent, you owe it to any one of your clients to be able to make the best informed decisions or help them make the best informed decisions, right? And if you're a consumer, check, double check, not sure, don't commit, always ask someone else, all right? You can drop us a line. If I got time, I answer.
Part-time insurance agent.
No, X.
Part-time insurance
All right,
agent.
so X was because year one, easy to hit target. You only need to close 10,000 ringgit sales.
Okay, then year
year two, 20,000 of fresh sale. So,
fresh sale,
so I have to come out with 30,000 of fresh of sale in the first 2 years, and then year three was quite a huge jump. I think it was 50,000. I ran out of friends already. There was a low point in life. I had no friends because I was an insurance agent.
Yeah.
I'm just kidding. It just wasn't my thing. I can't do part-time. Don't do part-time in this kind of work, because the reason why I quit, the real reason I quit, was because my friend had an accident and he called me, and I was on call.
Okay.
I was on call in the hospital and I couldn't attend to him. I had to call my upline to attend to him, and that's when I realized I can't be in two places at the same time. And if I put myself in the shoes of my friend during the emergency, I want my agent there with me.
Correct.
To guide me, to know what's to be done. I had no freaking idea, and that was wrong. So I decided to let it go. Right. So, anything you want to add?
No, that's it.
All right. So this is us telling you things that your insurance agent may
wouldn't
not
want to
tell you. All right. And if you have any other thing that you want to ask or any experience that you have, just drop us a line down there on the comment box. Like, subscribe, and share our content. And till then, we'll be back again next week on the Two Dogs. I'm Dr. Ali.
And I'm Dr. Ingky.
See you next week.
Yeah, see you.